The global economy in 2025 stands at a crossroads. Persistent inflation, geopolitical tensions, and technological disruptions have created challenges that demand decisive strategies and adaptive policies. Economists provide vital insights into navigating these complexities, offering guidance on how nations, businesses, and individuals can prepare for an uncertain future. The stakes are high, as every decision made today will shape the economic outcomes of tomorrow. On this episode of Economy Explorer, we will delve into the most critical aspects shaping 2025, the global economy's trajectory, the fiscal challenges facing the U.S., the profound impact of geopolitical tensions on financial markets, and the transformative role of technology and policy. These topics are more than just headlines. They represent the forces shaping our everyday lives, from the cost of living to opportunities in emerging industries. By examining these themes, we aim to provide you with a clearer understanding of the risks and opportunities ahead. Whether you're an investor, policymaker, or someone simply curious about the world's financial future, this discussion is packed with actionable insights to help you understand and adapt to the changes ahead. Don't forget to like, share, and subscribe to stay informed and ensure you don't miss any part of this essential discussion. Global economic trends. According to the United Nations, global economic growth is expected to hover at 2.8% in 2025. While this reflects resilience against conflicts and inflation, it also underscores the uneven recovery across nations. The World Bank projects a similar rate of 2.7%, but warns that this pace may not suffice to combat poverty in many developing nations. Economies like India and Indonesia are expected to drive growth, while Europe and other regions struggle with high debt and sluggish investment. China's slowdown presents another challenge. Once a key driver of global growth, China now finds itself grappling with structural inefficiencies, an aging population, and geopolitical tensions that dampen its economic outlook. Efforts to pivot its economy toward domestic consumption have made some progress, but weak global demand and trade frictions with the U.S. continue to act as significant headwinds. Europe remains a critical focal point for global economic concerns. High inflation, ongoing energy insecurity, and a fragmented political landscape have constrained growth. Germany, traditionally the economic engine of the continent, faces challenges in maintaining its industrial output amid high energy prices and supply chain disruptions. Southern European nations, such as Italy and Spain, grapple with mounting debt and political instability, which threaten to derail any progress toward sustainable growth. Meanwhile, Japan continues to wrestle with slow growth despite its efforts to maintain an accommodative monetary policy. Demographic challenges, including a shrinking workforce, have limited Japan's ability to achieve stronger growth rates. However, recent innovations in technology and robotics may offer a pathway to overcoming some of these hurdles. In contrast, emerging markets like India and Indonesia shine as beacons of growth in an otherwise challenging global environment. India, buoyed by its young workforce and investments in technology and infrastructure, is projected to achieve growth rates exceeding 6%. Indonesia, with its expanding consumer base and natural resources, is also positioned as a key driver of regional growth. However, both nations must navigate risks related to inflation, global capital flows, and climate change. Sub-Saharan Africa also presents a mixed picture. While countries like Kenya and Ghana show promise through advances in technology and entrepreneurship, others remain mired in debt and political turmoil. The region's growth prospects heavily depend on access to global markets, investment in infrastructure, and climate-resilient strategies. Latin America continues to face significant challenges with uneven growth across the region. Brazil, the largest economy in the region, is projected to grow modestly due to reforms in fiscal policies and a rebound in commodity exports. However, countries like Argentina remain vulnerable to hyperinflation and political instability, limiting their ability to attract foreign investment. The hope for 2025 lies in a convergence of these economies toward healthier growth. Achieving this will require coordinated efforts to address structural inefficiencies, reduce geopolitical tensions, and foster a global neighborhood capable of tackling shared challenges. As nations navigate their unique hurdles, collaboration and innovative policy measures will be essential in shaping a more balanced and resilient global economy. U.S. Economic Outlook. The recent devastating wildfires in Los Angeles have left a profound mark on the U.S. economy, serving as a stark reminder of the vulnerabilities we face in the wake of climate change. These catastrophic events caused billions in damages, disrupted critical supply chains, and exposed significant gaps in infrastructure and disaster preparedness. The scale of these challenges underscores an urgent need for substantial investments in resilience and policy innovation to safeguard both lives and the economy from future climate-related disruptions. Beyond environmental concerns, the United States, often heralded as a beacon of economic strength, faces its own hurdles. The Congressional Budget Office, CBO, projects a $1.8 trillion budget deficit for fiscal 2025. This figure reflects the expiration of individual tax cuts and the potential for increased fiscal strain if those cuts are extended without offsets. Despite these challenges, the U.S. economy remains robust. Federal Reserve projections indicate GDP growth will slow to around 2%, with unemployment staying steady at 4%. New York Federal Reserve President John Williams highlights that inflation remains sticky, and while progress has been made, further efforts are needed to reach the 2% target. Consumer spending has also shown surprising resilience, fueled by a still strong labor market and wage growth in key sectors. However, rising interest rates have created challenges for housing affordability and corporate borrowing, highlighting the uneven nature of the recovery. While some industries thrive in this environment, others, such as manufacturing and retail, continue to face pressures from both domestic and global factors. Policymakers are navigating a delicate balance between supporting economic growth and curbing inflation. Analysts emphasize that while the U.S. remains in a position of relative strength compared to other economies, long-term fiscal discipline and structural reforms are essential to ensure sustainability. The interplay between federal spending, tax policy, and monetary tightening will play a crucial role in determining whether the U.S. can maintain its exceptionalism. The concept of economic exceptionalism underscores the notion that the U.S. can outperform its global counterparts despite prevailing challenges. However, achieving sustained growth will depend on the country's ability to implement forward-looking strategies, manage debt responsibly, and maintain public confidence in its economic direction. The role of geopolitics. Geopolitical tensions cast a long shadow over the 2025 economic outlook. Oil prices, driven by OPEC+ production cuts and escalating geopolitical risks, remain elevated despite weak demand from major economies like Europe and China. One particularly concerning factor is the potential disruption in the Strait of Hormuz, a vital choke point for global oil trade. Such a disruption could send energy prices soaring, destabilizing markets and further straining economic recovery efforts worldwide. Beyond oil, the U.S.-China relationship continues to weigh heavily on global markets. With China actively working to reduce its reliance on the U.S. dollar through alternative trade networks, long-term shifts in financial power are underway. While the immediate impact on the dollar remains limited, these efforts highlight a gradual reshaping of the global economic order. Meanwhile, Europe grapples with internal political instability, with France's sovereign risk now drawing comparisons to Greece's. an unthinkable scenario just a decade ago. Such developments not only hinder regional stability, but also amplify risks for the broader global economy. Technological and structural shifts. One of the most transformative forces shaping 2025 is technology, particularly artificial intelligence, AI. AI represents a fundamental change in how industries operate, urging businesses to consider how they would function as AI-native entities. This shift is not just about automation, but about redefining workflows, enhancing decision-making processes, and creating entirely new value chains. Companies that fail to adapt risk falling behind in a competitive landscape that increasingly rewards technological agility. However, the uneven distribution of technological investments highlights the disparities between regions. The U.S. continues to lead in AI and life sciences, leveraging its robust innovation ecosystem, skilled workforce, and venture capital markets to push the boundaries of what's possible. Europe, on the other hand, lags due to regulatory constraints, fragmented markets, and slower adoption rates, which stifle its ability to compete on a global scale. Asia, led by China, is making significant strides, particularly in AI and digital payment systems, despite geopolitical challenges and slower overall growth. AI's potential is vast, from transforming healthcare with personalized medicine and predictive diagnostics to revolutionizing education and remote work with adaptive learning systems. It also promises to enhance sustainability by optimizing energy consumption and improving climate modeling. Yet, alongside these benefits come risks, such as job displacement, data privacy concerns, and ethical dilemmas surrounding bias in AI algorithms. Addressing these challenges will require collaborative efforts among policymakers, businesses, and technologists to create frameworks that balance innovation with responsibility. Embracing the benefits of AI while mitigating its risks will be a critical factor in driving sustainable growth. Governments and industries must work together to ensure that the opportunities presented by AI and other emerging technologies are inclusive and contribute to a more equitable and prosperous future for all regions. One of the most transformative forces shaping 2025 is technology, particularly artificial intelligence, AI. AI represents a fundamental change in how industries operate, urging businesses to consider how they would function as AI-native entities. This mindset is essential for staying competitive in a rapidly evolving landscape. However, the uneven distribution of technological investments highlights the disparities between regions. The U.S. continues to lead in AI and life sciences, while Europe lags due to regulatory constraints. Embracing the benefits of AI while mitigating its risks will be a critical factor in driving sustainable growth. The future of the U.S. dollar. The U.S. dollar remains the world's dominant reserve currency, a cornerstone of international trade and finance. However, cracks in this dominance are beginning to emerge as countries explore ways to reduce their reliance on the greenback. Efforts by China to create alternative trade networks that bypass traditional financial systems signal a potential shift in global dynamics. These initiatives include expanding the use of the yuan in trade agreements and promoting digital currency frameworks that challenge the conventional dollar-centric model. At the same time, central banks around the world have been increasing their gold reserves, reflecting a broader strategy of diversification. Gold, long considered a safe haven asset, is being prioritized as a hedge against potential economic instability. Additionally, the growing interest in Bitcoin and other cryptocurrencies highlights a new wave of alternative financial assets. While Bitcoin and gold have gained traction as portfolio assets, they remain far from replacing the dollar as the global currency of choice. Instead, these developments underscore a slow but noticeable shift in the global financial architecture as nations seek greater autonomy in managing their economic futures. Despite these challenges, the dollar continues to benefit from the trust and stability afforded by the U.S. economy. However, to maintain its dominance in the long term, policymakers must address underlying vulnerabilities, including fiscal deficits and geopolitical pressures, to reinforce confidence in the dollar's role as the world's reserve currency. Charting the path forward. As we navigate 2025, the economic landscape remains defined by resilience and adaptability in the face of uncertainty. While the U.S. continues to serve as a pillar of strength, fiscal challenges and global disparities cannot be overlooked. Geopolitical tensions, technological shifts, and climate-related disruptions further complicate the path forward, requiring innovative strategies and bold policy decisions. To thrive in this dynamic environment, we must prioritize resilience, agility, and forward-thinking investments. By doing so, nations, businesses, and individuals can turn challenges into opportunities and lay the foundation for sustainable growth in the years to come. Thank you for joining us on this journey through the 2025 Economic Outlook. Don't forget to like, comment, and subscribe to Economy Explorer. Be sure to check out the suggested videos on your screen and continue exploring the world of economics with us. We appreciate your support and look forward to seeing you in the next episode.